Hello friends, this is Martin from Secrets, the channel from Learning About Trading and Investing. Welcome to Daily Market Analysis Show, where we look at what happened in the markets during the day and how we can plan for a better trade tomorrow. And this is analysis for March 3rd, Thursday 2022, tomorrow. So we had an indecisive close in the market that happened today, and the banks are showing extreme weakness, right? And tomorrow we have an expiry. Let's see what we can learn from the market's action today and how we can plan for next day. So pre-market analysis will be based on all of these parameters that you see on the left side, and we would have additional data analysis on parameters that you see on the right side. We'll wrap up some actions also, right? So this is the price action. You can see that it's an indecisive dodging, right? Small body candle, right? Any small body is indecisive, and it's also an inside bar. It's fully within the large candle previous, so it indicates some consolidation, some indecisiveness to action. Bank Nifty also it formed an indecisive candle, but it was a gap down. That actually it's not an inside bar. So basically, Bank Nifty showed big weakness. 832 points gone at a 2.3% lost from the previous day, and it's a doji bar like you see here, right? Indecisiveness is there. It's not sure whether it has to further go down or stay there or move. No, it's not like that. So Bank Nifty lost 188 points. That's like 1%. So 1% and 2% is what's the loss at zero. So basically it is resisting below the, there is a gap here from the previous close. That gap is unfilled. Bank Nifty also, that big gap is unfilled, and it is kind of resisting in that gap, right? So there is an M pattern. There is a M pattern. If you look at some kind of M pattern, weekly especially, it's forming. There is, here you can see a clear Bank Nifty also an M pattern. M pattern is nothing but a double top, right? Which if breaches the next line, it could go down. So 5950 is some kind of M patterns neckline breakdown zone, which you'll have to watch whether it's breaching or not. Bank Nifty and Nifty, that's the story that happened. So intraday price action is interesting. It was highly volatile. Look at the action that happened today, right? It gapped down, then further gap down, and then recovered. So similarly, it gapped down, further gap down, and then it recovered. So what was it like? Nifty was 1% down, the opening gap up, gap down, right? And then it further went another 1% and then recovered 1%. So Bank Nifty is like nearly 2% gap down, then again another nearly 2%, like 1.8, 1.7% further down, and then there is a recovery of 1.8%. So it was a highly volatile V shape another day, right? So that's the intraday price action. Bollinger Bands, if you see, it's expansion on both sides, and the price is moving on the downside, breaking down. So clear mitigation of bearishness on Nifty and the Bank Nifty also, right? Expansion of volatile, so highly volatile because of the expansion of the bands, far away from the median, and also bearish, with bearish bias because it's breaking down. The price is breaking down the lower band. Now support resistance levels, make a note of this. What is this box is the is a major window gap resistance. And if you also, this yellow box is where the gap resistance is there. So you can see that the price today didn't even touch the gap. Other day it tried to climb over that, felt resistance, and then fall down. Bank Nifty also, it's far away from the gaps, right? So supports, if you see 16,550, 16,650 is the immediate support. If that breaks, then 16,450, which is a Fibonacci 50 retracement level. If that gone, then 16,150, 16,200 level. If that is gone, then 16,000 rounding number is there. That is also gone, and 5950 is the zone where it's Fibonacci 61 retracement level to keep a course watch. Rest on upside 16,700, 750, then 16,800, 900, that is Fibonacci 38 major resistance, or that is then 17,000. That's all coming within the gaps. It's a confluence of gap resistance and the previous resistance zones, right? So any close above 17,000 only will give any hope of this bearishness to end. Resistance similarly on the Bank Nifty, if you see, the immediate resistance would be the 35,900 zone, 600 to 900 zone, and then above that you have 36,800, 300 to 800 big zone of the Fibonacci 38 also rise. Then above that you have 37,000 kind of zone, and then 37,500, which is Fibonacci 23, and then above that 37,800 and 38,000 levels. It's resistance on the upside. Downside support can be seen at 35,000. That's where we are, and below that you have 34 350 to 750 zone. A new swing low is formed today here. Previous swing low is broken today, and below that you have 34,000 kind of level. 34 750 350, if that is breached, then you have somewhere near to 34,000, which is Fibonacci 61 retracement level, which is kind of crucial level. Any breakdown from 61 would mean serious bearishness, right? So let's watch the 34,000 and that's 5950 levels in the coming days, right? Making out of these support resistance levels, that's where you have to unwind your positions, you have to pyramid your positions, or you have to go long, short. All these decisions are based on this support resistance that derived from the Fibonacci retracement level and previous support resistance. You can also correlate this with the open interest support resistance levels also, that which you will be seeing later. Momentum divergence, if you see, it's fallen back to the bearish momentum in the short term, and medium term continued to be sideways. Bank Nifty again fallen back to the bearish momentum, and then medium term continues to be sideways, right? So low divergences are seen. So it climbed back. If Nifty, if you see, it climbed back into the bullish zone, into the sideways zones from the bearish, but could not stay there. Slightly slipped. Otherwise, it would have been a good support zone. If it had taken support at 40, then we could have expected that it's a range shift on. It's not a range shift, it has slipped back. Bank Nifty also lost the grip and then climbed up and then fallen back to the bearish zone. So momentum is bearish, clear. Trend, how about that? It was already bearish. Today it continued to be bearish in the short term, and the medium term it is also bearish. And it is a rising strength, that is the worry. The bearishness is there in the trend and the momentum and the price pattern and the Bollinger Bands. Volatility, very high volatility, 29.3 is where it closed after 2.3% increase. Implied volatility is 28, and then IVP is also extreme, 99 top, right? Everything is at the volatility is at the peak, right? So you have to be extremely careful when you're trading. If you're trading, right, this may not be the time to actually do any trading, right? It may be the time to pick up stocks rather. Open interest analysis, if you see for tomorrow's next expiry, March 3rd, so naturally volatility will be there. But look at the range. The range, the highest put rating is at 15,500, and the highest resistance call rating is seen as 17,500. That's 2,000 points. The wide range is never come. So that's the kind of volatility that we're talking about. 16,000 and 17,000 is the next level of maximum put and call rating that is there. Right? Put call ratio is 0.57, is near to bearishness, and short build up is what happened in the futures of interest. For the Nifty, Bank Nifty 35,000 and 38,000, 3,000 points range. So Nifty is 2,000, 3,000 point, Bank Nifty is nothing. But look at the volatility that expected by the option writers. Maximum put rating 35,000, maximum call rating 38. Next is 33 put rating max second, and 37,500 also is good enough of call rating that is there. 0.57 put call ratio is very close to bearishness. Short build up that you see in the futures. That's open interest analysis, right? Highly volatile, wide range levels are where the put and the call writing has happened by the option sellers. So it will be interesting to watch where it is going to close. But overall, if you see, you can see that a lot of call writing has got added up today, right? In Bank Nifty and the Nifty also. Not much of unwinding has happened in Nifty, but Bank Nifty has shown some unwinding on the put side, right? So overall, the graph clearly shows it's bearish. So the levels to watch would be 59.50, as I said before, right? So that would 16,200 also is a previous swing low, which is not breached today. So 16,200 has to watch, and if that is gone, then 59.50 is what we have to watch, right? So 15,550 breach may not happen tomorrow, but 16,200 will it holds or not is something that we have to watch. And it's more bearish that you see the heat map. Reliance was only thing that was holding the market. The rest of all the major stocks, the CFC, IDFs, HDFC was clearly bearish, and ICICI Bank also bearish. And sector-wise, if you see bank sectors, all the sector-wise, overall, if you see 18 banks did well, metal also did well. Metal was doing only anyway, but rest of them are all green. But financial services may mean Axis Bank and Bajaj Finance, which made a done well, but you need to look at anyway, banks are not doing great. So it is some NBFCs that might have done better today, extremely better today. No, it is not Bajaj Finance also. So you look at that. Index heavyweights, if you see HDFC Bank has slipped from the trend line. It is at a support zone actually. There is a support zone which is the bottom of this curve. So most likely it may take support there and then bounce back. Right. So breach of that is not likely. But all the gains that it done is lost in the last 2 days. It is momentum is in the bearish zones. Price pattern is at the support zones. Right. HDFC also gave up. It is given up the major support. HDFC also. And Reliance is the only one that's performing. It's in the channel trend. It's a green close today. Momentum is rising up and it's a cup and handle and seems to be on the neckline trying to break out from this channel. So Reliance is bullish heavyweight, only bullish heavyweight you can say probably. Infosys, red day, another consolidation has been happening in the downward falling trend line. TCS is attempting to recover and get back to the channel after taking the support from the zone, and it is now going to the sideways at least. So that's what has happened, but it's a red close today for the TCS or the IT sector assets did well. Kodak Mahindra, if you see sideways movement, some kind of hammer recovery. It was showing green last several days, but yeah, and maintained the sideways movement. It's not momentum is not good enough to break out of this resistance on the upside. ICC Bank slipped from the major support zone. There is another support is coming at the ascending triangle point on breakout neckline. Breakout point, that point support is there down. So whether it will hold that support or not is what we'll have to see. And this is the point where there is a trend line ascending triangular pattern that is broken out and it moved this much, right? So that is where it is heading towards right now. Momentum seems to have not able to sustain the sideways and slightly slipping in the various zones, right? So Reliance is only performing sector, you can see. I mean the heavyweights. Sectoral performance, if you see, it's a mixed reaction that happened today. Most all of them went down. Only metal did a big 4% up move. Metal sector is super bullish. Medium term and sit on board are bullish. So probably it may be time to pick up some metal stocks. IT moved down 0.38. Auto closed down 3%. Pharma 2%. Auto something is wrong. 3% down. Right. Pharma close 2% down. Half a percent down. FMCG 1%. More than 1% down. Reality. So momentum is bearish in FMCG, pharma, auto, and sideways in IT and reality, and it is bullish in metal. So it's a mixed bag. Right, the sectors which are performing have gone bullish in a downtrend. Some of half of the major sectors are floating around the sideways, consolidating, while auto, pharma, and FMCG is trying to sustain and get back on the sideways. It's in the bearish zone as of now. So until there is bullish momentum, we just can't have the top down approach, taking the stocks from the best performance. So as of now, metal is showing that, and it may be a good time to pick up some metal stocks. Institutional participation, Fyers has been selling us since long and non-stop, and interestingly, DIs have increased their amount of buying the recent last 2 weeks. And today's data is not available. This is the last trading day's data. Today's data might be the same, right? It might have been heavy selling by the Fyers, and it might have been selling from the DIs also, but may not be as big as the Fyers, right? So some recovery happened, so somebody has bought it. Definitely it has to be DIs. So we'll have to look up that details later. But institutional selling is a worry, right? Especially foreign institutional selling. Dollar is indecisive, right? It's above the 75 levels. Rupees weekend and dollar is gaining the strength and it's moving up. Dollar index, USD INR is reflecting a weekend rupee at the same time, right? Momentum is near to the So, bullish sounds on both. Crude oil is breaking out and then going extreme 110 kind of levels was what it was. It is with great momentum. It's extremely high price momentum action. Price action is what you see. So the next target may be somewhere in the 115 kind of levels, which is 11-year-old high or something, right? Gold attempted to break out, so third time attempt today. It closed red. Seems like that breakout from this major resistance zone is not going to be that easy. But yesterday was a close of above the 1917 kind of resistance zones. So right, it seems to be having enough strength to take out that, but it may be some profit booking that may be happening here probably. Yeah, gold seems to be breaking out. Whether it will succeed in that, we'll have to see. Global indices, it's on the edge. You can see that it is a red close down, and it is a major support zone. It once again breached that and then managed to close just on the edge. So we'll have to wait and see today. Gold is bearish zones, trend also is bearish zones. Nasdaq is also at the major support zone, right? So you have to watch it today whether it's going to breach. S&P 500 also on the downside channel bottom, and a major support is very close by. So this is what is marked as the major support zone, and this is what is marked as the major support zone in Nasdaq and S&P 500 down, right? And down. So you have to keep a close watch on these indices as they're facing selling pressure and they're not able to move up the channel. Actionables 2, Whirlpool India seems to be having a weekly head and shoulder breakdown. So you'll have to make this entry on a daily time frame, right? And momentum is bearish, volume is showing above average, big selling is happening, and trend is also bearish. So another short selling that was given yesterday is coming in once again here. Because it is Dr. Reddy's Labs and it is also a short sell. Momentum is bearish, trend is bearish, and price is broken a major support zone. So Dr. Reddy's and Whirlpool of India both short sell, both short picks for the next week. These are all swing trades, right? You have to watch these candles closely. Supports and resistances has to be marked, and then as soon as you see indicators of a reversal or a support bounce, you'll have to stop the trade, right? Trail it till then. Wrap up is moderate bearish views. What my views? It's based on the chart patterns, support resistance levels, price patterns that you see, the bearish momentum, the indicators are saying, the bearish trend that indicators are showing, the Bollinger Band showing the breakdown and downside. All mixture of that gives me a feeling that it's bearish is what the chart is telling me. Right? It's filling markets overall. If you see, it's selling pressure can clearly be seen. The banks are showing weakness. Definitely, second day yesterday also banks were showing weakness, and today it is 800 points. And the recovery is not able to move up the gaps. There's a big window gap trend line. New swing low is made in the bank nifty. Double top formation is there, can be visible. So all of this gives indication that there is bearishness. Peace talks and war talks are all happening. War is happening right now. Bombing is happening. All these news is floating around. So extreme volatility, escalation, de-escalations, all this will be reflected in the markets, right? So that is why you see a VIX that is touching 30 last several days. Volatility about 29. You have to be extremely careful. Stay away from the trading if you're not very good professional trader. FI continuous selling is worrisome. The positive factors are very few, right? Except that market has some supports, but going slow in the is not crashing in one shot, but the buyers out there, the AIs are buying it whenever there is a sell-off happening, and then again market falls, and then again it is, there is buying that is happening at the lower level. So it's your list, and if there is some, and VIX is about 20, below 20 is where you have to get back to trading. Gold can be bought as a hedge positions if you are worried on your investments, long-term investments basically. And this may be time to buy the dips and quality stops in small lots, SIP mode, SIP mode, right? And option trading strategies, hedge positions and all that. Tomorrow may be very highly volatile because of the expiry, weekly expiry. But if you're taking positions, go for counter spreads or hedged risk-defined strategies where you'll not lose more than what you already know, right? So don't go for overnight positions without hedge positions, and intraday has to be type stop losses because V-shaped moves are happening even now, right? There's no straight away downtrend that is happening. It goes down, then moves up, then again goes down. So just don't know when the market. It's very difficult to catch the trend in such market, right? Such volatile environment is the reason why we have to be cautious on the volatility. It's difficult to catch the trend. So that's a moderate bearish view is what I have. So if this helps you to frame your own trading plan for the next day and then frame your market view for the next day, then consider hitting the like button and share to your friends. We have very few subscriptions. Your help in this regard will be highly motivating. Thanks a lot. Happy trading, happy learning.